I think gold's a waste of time. It's dead money. Maybe it's virtue signaling if you're buying it. Gold broke down, as a reserve asset before World War One. And on the eve of World War One, when all these nations declared war, every single one of them went off the gold standard. And so there's a myth of a gold standard that people like to cling to, but I've read like 3,000 years of economic history.
Hmm.
And as far as I can see, it was never as good as anybody ever thought it was. It's always been defective. The real elephant in the room here is two things. Gold doesn't work in time, and gold doesn't work in space. If you look at using gold as a property asset, a reserve asset, a treasury asset in space, there's no way for 1,000 different organizations to custody their gold and swap it every week and settle it. You can't settle every day. You can't settle every week. You can't even custody it, right? So gold centralizes. I mean, how is it possible that the United States could seize the Russians' gold,
Hmm.
right? Because the faux gold standard after Bretton Woods collapsed, I guess, when the French wanted their gold back. But if you wanted it to be an effective treasury asset in space, you would need to allow peer to peer settlement. And that means how do you have, and when I talk about peers, I'm just going to talk about Apple, Google, JP Morgan, Citigroup, Bank of Japan, Bank of Switzerland. How about the 10,000 biggest economic entities in the world? They all need to be able to custody and swap it every month for it to be stable as a settlement network. And of course, gold isn't that. You can't sell it every day. It doesn't move fast enough. And so that's why it fails versus Bitcoin. With Bitcoin, you could have 10,000 different custodians, and they could be settling $100 million between each one or $1 billion between each one every day, and the network will hold that kind of load. So gold doesn't work in space, but it also doesn't work in time. Gold has under best of circumstances, a 2% inflation rate. That's steady state. And a 2% inflation rate of gold means a half life of 30 years, which means that 87 or 88% of your economic wealth is dissipated over 100 years. If you look at Spain in the 16th century, and the 100 years after they discovered America, and, they looted the Aztecs and the Incas and everybody else of their gold, they also created 500% inflation, right? And so they actually hyperinflated their currency in gold coin, collapsed their own empire. So gold is inflationary. The difference between 2% and 0% is the difference between a half-life of 30 years and a
Of
half-life of a
infinity.
million billion years,
Yeah.
right? And so there you go. Bitcoin is the fix on gold. Gold itself is just a defective treasury asset because it's too slow and it's too inflationary. Back to words. Everybody wants to fight over a word, but let's parse the word money. What is money? A classic economist says money is a medium of exchange, a unit of account, a store of value, and then they stop thinking. What does that mean? Well, it turns out that in Argentina, the medium of exchange is the peso, the unit of account is the dollar, the store of the value is neither. No intelligent person in America thinks that the US dollar is a store of value. If it was, you would find a billionaire that would say that 95% of their assets are in cash accounts in the dollar. And no one is, right? Everybody knows the store of value is something else. Maybe it's the S&P index. Maybe it's a building on Park Avenue. Maybe it's a sports team. So in 1914, we had a war. The war was financed with debt. If you dig a bit, you find out that the Bank of England bought a lot of the war bonds. And you'll find out that the US government bought a lot of the US bonds. So we issued a lot of debt. The governments bought the debt. After the war, they had inflation, right? There's a phrase in New York, right? Pre-war. I think they're referring to World War II, but generally pre-war means before the war, we had good stuff and we built really good, high quality buildings. And then after the war, for whatever reason, we lowered our standards. In Miami Beach, an acre of land before the war was $10,000. Today, it's $10 million. Okay. So will the government collapse? No. Will the currency collapse? Well, it'll just keep sliding.
Right.
So what do you call it if the dollar is worth 0.1% of what it was 100 years ago? It's like, but that's where we are,
Yeah.
right? So the currency will weaken, but intelligent people will they will adopt a different asset as a store of value. And the best asset for a store of value in the 20th century, if you were wealthy, was property, like a building or land. And maybe if you were middle class, it was a diversified stock portfolio. You know, clearly the Vanguard 500 or the S&P 500 became the the primary capital asset, and it defined the cost of capital for most, you know, corporations and most institutional pursuits. So I think Bitcoin, if you look at it, it's money, but it's the store of value element of money. I think that strong governments will continue to issue currency. They will designate it legal tender. When the country collapses, like El Salvador after the Civil War, or Nigeria, or parts of Africa, when your country or nation state's no longer functional, you won't have a currency. You will adopt somebody else's currency, whether it's the CFA or the euro or the CNY or the USD. But that's okay. And I think that the right way to think about the world going forward is every intelligent person, every reasonable person is going to adopt the local currency as a medium of exchange. They're going to adopt the world reserve currency, you know, as their mid-level, you know, unit of account. That's probably the dollar, unless you're in the Chinese sphere of influence. It might be the CNY. If they're a conventional investor, a traditional investor, and that's like 99% of the money in the world, they're going to use the S&P index as their store of value, or they're going to have high quality, desirable real estate in the Hamptons or New York or Miami, or they're going to have their home. Most wealthy people don't even think bonds are a store of value. They generally think it's, you know, JP Morgan's survey of family offices says 45% of their money's in alternative assets.
Right.
So traditional investors will use alt assets, equity, or, you know, real estate type portfolios, and then occasionally, if they're lucky, they get collectibles, Picassos, or the jets, right? And then the new investors, the 21st century digital investor, will look and they'll add Bitcoin into that mix. And you know, obviously, I happen to believe Bitcoin is by far the best form of property, and it's obviously the best form of digital property. And I happen to believe that the best way to think of it is a capital asset. So I view it as digital capital. It's going to reshape the capital markets. And why is it a little bit better than property? Property evokes $1 billion or $100 million digital warehouse or digital building, but most people don't think that they can decompose and teleport their buildings. But capital, like treasury assets, they need to be liquid. And so if I have $1 billion on my balance sheet and I can liquidate 1% of it a day, if I can buy 1 million more worth of property or sell 8 million worth of property, as a corporation, I can use Bitcoin as a capital asset. It's very difficult for a corporation to use 4 buildings as a capital asset. I mean, other than, I guess, you would refinance the building and you would adjust your debt load on the building, and you would be using you know, the dollar, right, as your liquidity there.
Michael further elaborates on the inefficiencies of gold as a reserve asset, particularly in our interconnected world. Gold's physicality hinders its ability to be a seamless global treasury asset. The inability to quickly and efficiently settle transactions makes it a poor choice in comparison to Bitcoin. With Bitcoin, thousands of custodians can settle large sums daily without the same logistical issues gold presents. Thank you for joining us on Unscripted Crypto. If you found this discussion valuable, please give this video a thumbs up, share it with your friends, and subscribe to our channel for more insightful content. Let us know in the comments what you think about Michael Saylor's views on gold and Bitcoin. Until next time, stay informed and stay crypto savvy.